we wish we could be so lucky as to someday be able to be even mentioned in the same sentence with a great company like Tesla. I mean, until one of us in this space sells a car and does it efficiently without having any issues, we have no business even mentioning, Tesla in the same sentence again.
Hey guys, Tony DiNardo here. Welcome back to the channel. I'm going to do a quick market recap for you for Wednesday, June 1st, talking about the highlights of what we are looking at today. I'm going to touch on the GME earnings and the upcoming shareholder meeting tomorrow. I'm going to talk about the market performance in general and AMC. I'm going to discuss quickly an interview with the CEO of Mullen, David Michery. I'm going to touch briefly on the trade of the day that we were focusing on in the Discord today. The ticker symbol was TNXP. One of our members made $1,200 on this play today. A quick in and out pump and dump. If you played it correctly, there was a great opportunity on TNXP today. And finally, I'm going to close out by talking very briefly about this insulting SEC video they put out against meme traders and discuss very briefly, again, one last time, this NSCC-2022-003, the SFT clearinghouse, and summarize one last time for you my thoughts on that regulation. Let's get right into the video. Since the market's closed, and as you all know by now, today was not a great day in the market with the S&P down 0.81%, the Dow Jones down 0.5%, and the NASDAQ down about 0.75%, with decliners unfortunately leading the advancers today. 4,610 decliners and 2,930 advancers today. So what caused this decline and uncertainty in the market today? Well, once again, it was the same thing that we talk about every day, that we've been talking about for months, that the market is going to be a little bit bipolar until we get a lot of these things behind us that are in the news. Russia, Ukraine, quantitative tightening, interest rate hikes, inflation, and supply chain issues. In fact, JP Morgan CEO in a meeting with analysts today said, brace yourself for an economic hurricane caused by the Fed and the Ukraine war. I do have a video that I'm working on for you specifically about what is quantitative tightening and how is it going to affect you and the markets. But just know that the implementation is early this month in June of 2022, and they're going to slowly ramp up to $95 billion a month in reduced bond holdings in an effort to reduce the balance sheet of the U.S. federal government. As this quantitative tightening gets implemented, that will create a reduced amount of liquidity, and this will have some impact on the stock market. More discussion on that in an upcoming video. Mr. Diamond also talked about the possibility of oil rising up to, what did he say, $150 or $175 a barrel. There are a lot of moving pieces right now in the global oil production and supply puzzle. And while I don't necessarily agree with Mr. Diamond about a price target of $175 for a barrel of oil, it definitely is in the realm of possibilities. And these are the sort of things that keep investors on Wall Street worried, because fuel prices this high would have broad-reaching implications both in the United States and globally in terms of how they affect the consumer and businesses and ultimately earnings of corporations. Moving on to Gamestop. After the bell today, Gamestop did report its first quarter earnings. We're going to talk briefly about that in just a second. And as you probably know, Gamestop has announced their plans to launch a NFT marketplace by the end of the second quarter of 2022. After the market closed, as usual, GameStop Corporate had a phone call that you could listen in on with analysts where they discussed the earnings. And to my disappointment, once again, they declined to discuss their outlook for the company for the future. Getting into the specific results, so GameStop reported $1.38 billion in revenue for the first quarter. That is an increase from Q1 a year ago, in which they posted $1.27 billion in revenue, so that is a positive. However, on the negative side, GameStop reported a loss of almost $158 million for the quarter. If we compare that to the quarter a year ago, the loss was $66 million. So we are looking at increasing revenues, but loss for the quarter almost triple what it was a year ago. This obviously is not the direction that I want to see GameStop moving in. For the quarter, GameStop had hardware sales of $674 million, which was a decline from a year ago. However, they did have an increase in sales on both software and collectibles. Moving on to Mullen Automotive, another EV company, one that I'm not a fan of. I do not have a position in Mullen, but I know many of you are interested in it, so I'm going to briefly cover some of the updates on Mullen. As you probably know, Mullen's dropped from a high recently of $15 down to the $1 price range. There's been not only dilution recently in Mullen stock, but the CEO recently sold 750,000 or so shares at a price of about $1. Again, a bearish signal as far as investors go. Mullen has a short interest of 15.8%, with the shares on loan at 48 million shares. The current short interest at 43 million shares. Utilization is 100%, which is something that people are paying attention to, and the cost to borrow average is 7.35%. Yesterday on May 31st, Mullen did get a significant pop from the $1 price range up to about $1.45, $1.50 on this news of the results of the battery testing, which has been ongoing for the last month. And the results were impressive at the individual battery level. It has not been tested yet at the full car battery pack level, but these were impressive results, enough for people to run up the stock yesterday. Today's high on Mullen was $1.68, and it closed out the day at $1.42. If you are a momentum trader, a move from $1 to $1.68 in 2 days is a fine trade to go ahead and lock in. Now, I know many of you are holding on to Mullen because there's people on YouTube telling you it's going to $20 or $100, but I want you to think about the dilution. I want you to think about the CEO selling almost 1 million shares at $1, and I want you to consider the fact that Mullen is not really going to be getting into vehicle production for a couple more years. Now let's talk about the interview today on Todd Alt's channel. I'll put a link to this interview in the video description if you want to watch the full thing. It's almost an hour long on YouTube with CEO David Michery. I played a little teaser clip from that interview at the beginning of this video, and you might want to go watch the whole thing, but the net of what David Michery says is the problem that I have with a lot of these EV companies. They need to get into full production without any issues before any of these second or third tier EV companies could be any sort of challenger to a company like Tesla. David Michery has been teasing an upcoming announcement about a partnership with a Fortune 500 company, and once again yet today he declined to speak on that at all. There are people that say Mullen is all smoke and mirrors, that it's a sham company. I'm going to stay out of that debate, but what I do know is that this company is not in full production, and you should consider this a highly speculative investment. If you're playing with Mullen, and do not invest money that you cannot afford to lose, that you cannot afford to see the stock go to zero. Moving on to AMC, there was no real new news today on AMC after coming off a great weekend with Top Gun Maverick. AMC closed down almost 11% today at $12.81. The quick short interest update we're looking at is 22.79% short interest. We got shares on loan at 175 million. The current short interest is 117 million shares, and the cost to borrow continues to go up at just over 10%. I'm going to be watching with interest the Gamestop news tomorrow out of the shareholders meeting to see what they announce as far as a stock split, a possible stock dividend, and see if that or some other catalyst will help out both GameStop and AMC. And in general, I am waiting for the market to turn around and get big money moving back into the market to see our next big move up in AMC. The short interest and the rising cost to borrow continue to be very bullish signals for me. My outlook on AMC has not changed, and I continue to hold both my shares as well as some recent calls that I purchased for July and September at $16 and $20 strikes. Moving on to the SEC, I sent a pretty angry tweet last night to Gary Gensler and the SEC after I watched this. If you haven't seen it, I'm going to play it. If you already have watched this and you don't want to watch it again because it's going to make you angry, skip ahead 30 seconds.
Welcome back, Brad. It's your investment.
I'll take meme stocks. Invest.
Ouch. Your investment, Julie.
I'm going to do some research first.
Well played, Julie. Well played.
We can do research?
Investing is not a game. Always do your research before making an investment decision. Learn more at investor.gov. Before you invest, investor.gov.
Now, of course, I'm a very big proponent of doing your own research. That is one of the foundations that we preach here on this channel. And doing your own research does not mean just reading somebody's post on Reddit or Twitter or watching a clickbaiter who doesn't know what they're talking about on YouTube. It involves listening to trusted sources who bring you real due diligence and provide you both the positives and negatives of any play that you're looking into. And although I know a lot of you hate doing this, proper research also includes looking at financial reports and balance sheets and reading these quarterly financial reports as they're coming out. It is critical to your success as an investor, if you're going to be holding these companies long-term anyways, that you learn how to read a balance sheet and a cash flow statement and a quarterly or annual report from a company that you're holding the stock in. What irritates me is the SEC, who says that they are underfunded and can't even afford coffee in their offices, is wasting money on commercials like this on YouTube targeting meme stock traders, when I would wager that many of us know more about the companies that we're investing in and the market in general than the average U.S. investor, because we are following this closely every single day. And Gary Gensler or someone at the SEC, if you're watching this video, how about you give retail traders access to tools like real-time short interest, or at least short interest that is reported and that we can trust on a daily basis? How about you give us access to tools and research so that we can see the number of rehypothecated, loaned out shares that are replicated and synthetically created, diluting the supply of companies that we're investing in? Where is the tools and the research we can see to see this sort of data that is critical, that has been talked about in House Financial Committee testimony by trusted people in the industry? Where are these tools? Why aren't you spending your money digging into that and giving us the tools that we need? Now let's talk about Tonix Pharmaceuticals. This was the day trade of the day that we were focusing on the Discord. When I'm not on camera, I am in the Discord giving my thoughts about various plays to the folks who are supporting the channel. All you got to do is hit that member button. It's 16 cents a day. And today, congratulations to Super Steven making $1,200 in just a few hours on this play with Tonix Pharmaceuticals. Yesterday, Tonix was trading in the $2 range, and it ran all the way up to $4.79 today. If we look back at the history of this stock, you can see a price of $78 just 6 months ago. How does a stock drop from $78 to $2, you ask? Well, this company has not had great financial performance. In fact, the stock was trading for just a handful of coins, a few pennies, before they did a reverse split, a 1-for-32 reverse split on May 16th. That was critical information to know if you were playing Tonix today, that this is a company in trouble. And the only reason it was running at a $2 price point yesterday was because they bumped it up with a 1-for-32 split. Yes, you'd have to divide yesterday's price of $2 and change by 32 to get the real price of this stock a couple weeks ago, under 10 cents a share. Obviously, this stock has some problems. So what caused this stock to run from yesterday at $2, today almost to $5, with some people calling out price targets of $20 on this stock if it was just under a dime 2 weeks ago? It's something that I call PPN, plausible pumpability news. And this is something critical that you need to understand if you're playing these type of plays, and not get rope-a-doped into wasting your money and bag holding. You got to get in, get out, and always be taking profits. You got to understand the history of these companies before you run in and believe people telling you unrealistic price targets. Knowing the history of this company and that it has a lot of bearish signals, trading under 10 cents, just completing a reverse split, 1-for-32, you could filter the good news that came out that the pump and dumpers were using, the plausible pump news, the fact that they announced a share repurchase program, and the fact that they announced the issuance of a patent for the monkeypox vaccine, which only has a couple hundred cases around the globe, to know that this was a classic pump and dump. These are not news items worthy of a 100% price gain on a stock, and certainly not worthy of a run up to $10 or $20 like people were saying was going to happen with this stock. Now, you certainly could have played the run up in the stock in the morning if you got in early enough. That is a fine trade, but you got to recognize the signals here that we have on the 1 and the 5-minute charts and see when it's peaking and notice that the volume is dropping off. I put a post early in the morning at that peak when I saw it turn and the volume drop that it was time to turn the play around and short this stock. This is not the type of news that makes a very weak, financially poor company like this into a success and something that's going to 10x its stock price. You got to know when to get out and who to listen to and who not to listen to. If you're having trouble making those decisions and you feel like you're getting bad news from the wrong people, I invite you to join our Discord where I share with you a seasoned and reasoned investor's viewpoint on what is going on in the stock market today. And congratulations again to Super Steven today for making $1,200 in just a few hours, watching that turn, asking for my thoughts on it, and using sensible analysis to recognize that this was not a stock that was going to run all day. It absolutely makes my day to see our Discord members and those supporting this channel and every single one of you guys making money, know when to get in, know when to get out. So to close out today's video, I'm going to talk very briefly about this NSCC 2022-003. I've already done 2 or 3 videos on it in the last year. There was a previous regulation, NSCC 2021-10. I'll put a link to those videos in the video description. I'm not going to go through all of my thesis and my pros and cons and what I think about this rule. I've already talked about that numerous times in the last year. Those videos are there if you want to go watch them. But this rule did go yesterday into approved status. As far as why do we need a SFT clearinghouse, the genesis of this rule came from a panel that was looking into the 2008 mortgage crisis, and having a SFT clearinghouse was one of the recommendations from that committee. Yes, it's taken from 2008 till now to get this rule into place. Don't you just love the speed at which the NSCC and the SEC moves on getting risk taken out of the market? 2008 to 2022, and we're just now getting a rule in place. This rule is designed to reduce counterparty risk by inserting the NSCC as a counterparty between the two parties in an SFT transaction. SFTs are not something new. They've been in place for decades, and this rule attempts to reduce the risk to the market by putting the NSCC in the middle as the clearinghouse and the counterparty to both parties. If you want to know more than that, go watch my previous videos on this topic. I know that my views on NSCC 2022-03 don't agree with everybody out there that is discussing it, and that is just fine. Everybody is entitled to their own opinion, and many of them who spend as much time as I do looking into it, I talk to them on a frequent basis, and it's no surprise to them about my views, and it's no surprise to me about their views. I'm just sharing my opinion, and I have other videos out there if you'd like to see them with more details. I invite you to look at both sides and make your own decision. I am Tony DeNaro. I want to thank you for watching this market wrap. Sorry for getting this out so late, but that was a lot of material to cover. Join me on a live stream during market hours where I answer your questions on regulation, stocks, options, crypto, and more. No super chats required. Don't forget to buy and hold that subscribe button, and I will see you on the next video.
So you